Hi folks, it's Doc's Market Minute for Wednesday, March 30th, and I'm looking at a daily chart of the S&P futures, and this one's a little bit different. This is my gap chart. So it shows the S&P futures trading, but it only shows those times during the normal cash market day. So we have finally, I showed this as a target, and I never thought I would get there, and how about that? We have finally filled this gap. This is the only gap that I can really see. I mean, maybe we have, just the smallest gap up here close to 2100. Again, these are the full S&Ps, or this is the S&P E-minis. This is not the cash index, so it's going to be slightly different. Remember, the cash index topped out at about 2135. This one's slightly different in terms of the scaling, just due to the cost to carry and how the cost to carry declines into the rollover and those kind of things, right? So we have filled this gap. So what does this mean now? Well, with about 3.5 hours left to trade, this thing is getting seriously faded right now. And actually, what we do have is a little bit of a gap that is, obviously we gapped up today, so we'll see whether or not this gap gets filled to the downside. But we've got some fairly large ones. I mean, if you go back almost a year and a half, every single gap has been filled. And the reason for that is not just because of gaps need to be filled, but it's more because of the fact that we've been in a monthly consolidation pattern. So the markets have just been charging up, charging back down again, whipsawing everybody to death lately, right? So this is very common during monthly consolidation patterns, is anything that occurs on the daily chart is just going to get snowed under. So we got some pretty big gaps back in this area that could create a really nice opportunity for us as the price comes down. With this strength of an uptrend, anything that comes down like this is going to be at least a short-term to intermediate-term buying opportunity. Now, what we have to watch out for after that is if and when the price bounces, setting up as a lower high, and that could be an important lower high, because that could signal that we're rolling over again and we're just going on the next ride down in this corrected market. So today was fairly important because for all intents and purposes, we have filled in the triangle. So this triangle that started in late December, the last couple of days of December, and led to a very strong sell-off in January and a retest of those lows in February, has now been closed. So now this is an excellent place for people to be taking profits into this rally, and this is why we're seeing weakness this afternoon. Again, 3.5 hours left to go. We'll see what happens, but this has every indication of showing a key reversal bar up here with a higher high and a lower close. We'll see what happens tomorrow. Thanks for listening. See you soon.